You can learn every day, but you can't act every day. But I would advise you to start early, read everything in sight, and you'll have a lot of fun, and you'll probably make a lot of money.
There is a vast world of investments inside the business industry, and there is also a deceptive web of common scams that cost billions of dollars to investors in the past. In this video, I will be sharing the playbook of fraudsters, shedding light on their tricks that even caught the attention of the legendary Warren Buffett. There are 6 common investment scams that you need to know. Fake financial advisors. The first common investment scam is fake financial advisors. Take the example of seeking guidance from a financial advisor to realize that you have fallen into the trap of a scam artist. These advisors portray themselves as professionals with your best interests, but they intend to take out your hard-earned money.
Careful what you teach.
100%.
As I say, I watch YouTube. Take my headsets. I'm listening to all these money guys on YouTube. Some of them are very good. Some of them liars. You know that.
These scammers often use persuasive tactics, glossy brochures, and sophisticated websites to create an illusion of credibility. You won't believe some of the sneaky tricks these guys pull. They come in promising the moon and stars, guaranteed high investment returns, no risk opportunities, the whole shebang. But guess what? Their real game is to sweet talk you into handing over your hard-earned cash, and then poof, they vanish into thin air, leaving you with a whole lot of regret and nothing to show for it. And get this, these fake financial advisors are like those seagulls eyeing your fries at the beach. They prey on the fact that most of us aren't financial wizards, and hey, who doesn't want to strike gold overnight? They will give you the full court press, pushing you to make snap decisions before you even have the chance to say stocks. They will dangle promises of riches so wild they sound like fairy tales. All with this secret sauce of inside info or access to the holy grail of investments. But hold on to your wallets, folks. To steer clear of this mess, just do a little detective work. It's like checking if your favorite food truck has a health inspection sticker. First, make sure these guys are the real deal. They should be registered with the bigwigs that oversee the financial playground. And don't be shy, ask for some references, like you're chatting up the Yelp reviews of a new restaurant. And here's the golden rule. If it lands in your inbox out of the blue and it's too good to be true, it probably is. A legit financial advisor? They are like that buddy who makes sure you don't blow your paycheck on the latest tech toy. Overcomplicated strategies. Another area of investment scams shifts to the intricate world of overcomplicated strategies, an arena where fraudsters capitalize on confusion to lure unsuspecting investors into their trap. These tactics frequently have an air of exclusivity and refinement about them. Scammers take advantage of the widespread perception that affluent prospects must be complex and challenging to understand. They try to convey an air of knowledge by bombarding you with intricate charts, technical jargon, and difficult-to-understand notions. However, the lack of content and the web of dishonesty are hidden behind the intricacy. These fraudsters may claim to have discovered a unique formula that consistently beats the market or offers a guaranteed pathway to wealth. They might host expensive seminars or webinars where they reveal their secrets in exchange for a hefty fee. Unfortunately, these strategies rarely deliver on their promises and can lead to significant financial losses. To protect yourself from overcomplicated strategy scams, remember that successful investing doesn't need to be overly complex. Legitimate investment approaches are transparent, understandable, and grounded in solid financial principles.
There are no secrets in this business that only the priesthood knows. We do not go into temples and look at tablets that are only available to those who have passed earlier tests or anything. It's all out there in black and white. It's a simple business. You do need a certain temperament that enables you to think for yourself, and then you have to look for opportunities as you go through life, and you can't do something every day.
Take care if an approach seems overly complicated or makes unrealistically optimistic claims about the results. Be cautious of anyone who hides behind complexity to avoid explaining their strategy clearly, and seek assistance from reliable specialists alone. Real estate investment schemes. Talking about property, a lot is happening in real estate investment schemes. These schemes lure investors with promises of quick riches through property investments, but the reality often needs to catch up to their claims. Fraudsters behind these schemes employ fake seminars, glossy brochures, and persuasive marketing to convince you that real estate is a foolproof way to amass wealth. They might highlight past success stories or present themselves as industry experts, exploiting your desire for a secure financial future. One common variant of these schemes involves guaranteed property rental income. Scammers might offer properties in distant locations with the assurance of high rental returns. However, these properties often don't exist or are overpriced, leaving you with empty pockets. Another tactic scammers use is the promise of no money down deals. They might claim you can enter the real estate market with minimal upfront costs and leverage their expertise to secure financing. However, these deals can often involve hidden fees, inflated property values, and risky financial arrangements that leave you in a precarious position. Warren Buffett, the legendary investor, has repeatedly emphasized the importance of thoroughly understanding any investment, including real estate. Buffett's principle of never investing in a business you cannot understand applies here. Before jumping into real estate deals, seek professional advice, research the market thoroughly, be cautious of any promises that seem too good to be true. Ultimately, while real estate can be a legitimate and lucrative investment avenue, it requires a solid understanding of the market, careful analysis, and a critical eye to detect and avoid the traps set by fraudsters. So, protecting yourself from real estate investment scams requires due diligence. Research potential investments thoroughly, verify property ownership, and conduct market analysis. Seek advice from trusted professionals and avoid making hasty decisions driven by emotions or promises of quick riches. By keeping your eyes open and staying informed, you can sidestep the pitfalls of real estate investment schemes and make sound investment decisions that align with your financial goals. High returns with no risk. The promise of high returns with no risk sounds like a dream come true during investments. But before you get lured by this alluring prospect, there is a truth behind this seemingly perfect scenario. You know those scammers? They are like those smooth talkers who promise you the moon and stars, all while tickling your dreams of striking it rich without lifting a finger.
I have this book that will teach you how to make 300% a year. And all you have to do is pay for shipping, and I will mail it to you. How likely is it that a person who had suddenly found a way to make 300% a year will be trying to sell books on the internet to you?
They will swear they have uncovered the ultimate investment jackpot, one that supposedly delivers crazy high profits while being as safe as a featherbed. They are basically weaving this tale of a journey to riches that's as smooth as a Sunday drive, feeding off our natural fear of the unknown. It's like they are pulling a magician's stunt. Looks flashy on the outside, but it's all smoke and mirrors. They will toss around fancy words and whip out intricate charts to make it seem like a real deal. But here's the kicker. It's a facade. An authentic example of this scam is the infamous Bernie Madoff case. Madoff promised consistently high returns to investors for years, claiming his investment strategy was a black box that never failed. He assured his clients that their money was safe and multiplying, but it was all a clever scheme. Eventually, the truth emerged. Madoff's returns were built on a house of cards, and his investors lost billions. Remember the age-old adage to protect yourself from the allure of high returns with no risk. If it sounds too good to be true, it probably is. Legitimate investments always carry some risk, and anyone guaranteeing otherwise is likely trying to pull the wool over your eyes. Before investing your hard-earned money, research thoroughly, seek advice from trusted financial experts, and remember that genuine growth takes time and effort. You can confidently navigate the investing environment and stay clear of shady practices by remaining knowledgeable and on guard. Phishing and Ponzi schemes. Moving on to the following common investment scams, two notorious villains take the stage: phishing and Ponzi schemes. These schemes are digital age predators that exploit technology and human psychology to deceive unsuspecting investors. There is a mechanics of these fraudulent tactics which you must understand. Phishing schemes. Phishing schemes use social engineering to manipulate you into divulging sensitive information or transferring funds. This is a scam where you can consider an example of receiving an email or a message enticing you with a once-in-a-lifetime investment opportunity. These scammers impersonate legitimate institutions, creating convincing emails, websites, or genuine messages.
Your account has been deactivated. Click here to confirm your account. You've got a package waiting for you. All of these things are different forms of phishing attacks. Some of them are about greed, and some of them are tapping into fear. But they're all trying to social engineer you. They're trying to get you to take an action through some sort of immediate motivation.
They play on fear and urgency, urging you to act quickly. Ponzi schemes. Ponzi schemes are modern-day incarnations of the age-old robbing Peter to pay Paul principle. They promise extraordinary returns to earlier investors using the capital newer investors inject. The scheme collapses when there aren't enough new investors to sustain the promised payouts, leaving most investors with substantial losses. To shield yourself from these predators, 1. Cultivate a skeptical mindset. 2. Verify the authenticity of investment opportunities before taking any action. 3. Check sender email addresses. Independently confirm offers with institutions, and never rush into decisions driven by urgency. 4. As for Ponzi schemes, remember Warren Buffett's warning. It's only when the tide goes out that you discover who's been swimming naked. Scrutinize investment promises, diversify your investments, and be cautious of any scheme guaranteeing unrealistic returns. You must understand vigilance is critical. Protect your personal and financial information like a fortress, and trust only reputable sources. By staying informed and maintaining a skeptical stance, you can navigate the treacherous waters of phishing and Ponzi schemes, ensuring your financial security remains intact. Due diligence and educated investing. In the business world, the path to success is paved with due diligence and educated decision-making. There are core principles of due diligence that help in how adopting an educated approach can empower you to make informed investment choices that stand the test of time. Take a scene where you are considering a significant investment. Before you take the plunge, due diligence demands that you thoroughly investigate every aspect of the opportunity. So here's the deal. When it comes to diving into investments, it's like being a detective on a mission. You don't just dip your toes in, you go deep, Sherlock style. You have got to snoop around the investment itself, who's pulling the strings, and what's happening in the big picture of the market. This isn't just a Google search, it's more like a financial treasure hunt. Think about it as due diligence, a fancy way of saying you are not taking things at face value. Nope, you're rolling up your sleeves and getting into the nitty-gritty.
We've never been burned by we've been burned only in the sense that we've made mistakes on judging the future economics of the business, which would have had nothing to do with due diligence. We regard what people normally refer to due diligence as really sort of boilerplate in most cases. It's a process that big companies go through, and they feel they have to go through it, and they're ignoring, oftentimes in our view, they're ignoring what really counts, which is evaluating the people they're getting in with and evaluating the economics of the business. That's 99% of the deal.
It's not just about reading the brochure, it's about going through the fine print, the financial statements, and the risk reports. You're practically Sherlock with a calculator. For instance, let's say you are eyeing a company's stock. Smart move. An example of due diligence is checking out how they're doing financially. You're peeking into their pockets, their debts, and how they are strutting their stuff in the market. It's like being a financial detective, figuring out if they are a solid pick for your investment crew. Now, let's talk about being an educated investor. The opposite of those wild guessers throwing darts at a board. Being smart means you have done your homework. They empower you to navigate confidently, with the knowledge that every choice you make is grounded in careful research and a deep understanding of the forces shaping the financial landscape. By embracing these principles, you elevate your chances of making investments that align with your financial goals and stand the test of time. Remember that due research and wise investing will be your compass as you navigate the world of investments. With the correct information, you can avoid fraud and make decisions that will protect your financial future. If this video has helped you, Show your support by liking and sharing this video. Remember to subscribe to my channel for more valuable insights on navigating the complex investment landscape.